to the Scaling Japan podcast, a podcast about how to grow your business from $100,000 and beyond in the land of the rising sun.
Welcome to the Scaling Japan podcast. I'm your host, Tyson Batino, and on today's episode, we have Makoto Shibata from FINOLAB. And I'm very excited to have Makoto on our podcast today. In the past, we've covered areas like angel investment and venture capital, but we've never talked about corporate venture capital. And in scaling your company, sometimes corporate venture capital can really help to accelerate your growth because of the connections they can bring to your organization. We are really lucky to have someone with Makoto's experience to tell us about CVCs, or corporate venture capital. I'm very glad to have you, Makoto, and could you please introduce yourself?
Thank you for having me today. And I'm Makoto Shibata from FINOLAB. FINOLAB is a fintech incubation office in central Tokyo. And we have like 50 startups. And also we have like 20 corporate members trying to pursue open innovation. And before joining FINOLAB, I was working in one of the large financial institutions for many years, particularly in the digital banking area. And also I was in charge of research and development. And part of that was to make investment into startups. And also I was involved in preparation of corporate venture capital. So I think I can talk from the large financial institution side. And at the same time, currently I'm helping many startups to get funding from some of these corporate venture capital. So I can talk from the both side.
Yeah, I feel really lucky to have someone of your experience on the podcast. And I'm really excited to learn about corporate venture capital. So I guess my first question would be, what is corporate venture capital?
I guess many of you have heard the word CVC, and actually it is a venture capital arm of any corporate, and particularly large corporates trying to pursue their innovation or open innovation strategy. They would like to work with a startup with good technology or a good business model, and not just having a contractual relation with them. They would pursue their possibility of making investment. And by making investment, you will be able to have a good understanding of your business partner. And also you would have certain control over your business partner. So in some cases where large corporates are a bit worried about the stability of startups, these venture capital investment is one good tool to have a good working relationship.
I see. So it really helps get these large corporations, get connected with the leading edge of technology, right?
Right. And I think here in Japan, with the very low interest rate and also relatively low growth rates, many corporates are trying to innovate with the help of startups. And that is one reason why many large corporates are trying to set up their corporate venture capital. These corporates are trying to achieve certain return from CVC, but the main purpose of setting up is to have a strategic alliance with the startups.
So I know in the past, corporations tried to do R&D, new product development internally. But have you seen it shift between a mixture of internal and now, I guess, through the CVC arm, like more of an external approach?
Many corporates realize that there are certain limitations for their own effort internally. partly because of the radical changes in technology, and partly because conservative nature of large corporation. They would turn to outside startups to accelerate their research and development process.
And it sounds like too, where rather than investing in something internally for like a year, 2 years, 3 years, they could possibly put smaller bets at a much lower cost
Right.
compared to doing it internally, right?
And you can diversify your portfolio of your investment in efficient ways if you are to find promising startups in different areas.
Yeah, because I can see the complexity when you're dealing with staff. Like, you can't cut a project that easily. But I guess if it's through CVCs, you can simply decide not to reinvest.
Right. And typically, the staff in the large corporates may not want to challenge totally new thing if you are to have your future career.
Yeah, and I can see that. If you mess up one project, they might not put you in charge of another project.
Right, right.
Thank you very much. So I think I have a much better idea of what a CVC is now. So I think probably some of the listeners are also curious, like, how is it different compared to a VC?
The biggest change is its goal. So, typical venture capital would try to maximize the return, especially they are raising fund from other investor, and they need to make sure that the investor would get the return in certain period of time. So typically venture fund is set for like 10 years or 7 years or 8 years, whatever the duration is. You would try to make the return as much as possible during the period. But for CVC, of course, you are expected to make certain return, but more importantly, you need to maximize the strategic outcome for the corporation. So if you can have a partnership with the startup or even acquire a startup through CVC and improve your business outcome, that is something that CBC is expected to carry out.
I'm not sure if this is correct, but I guess my assumption would be too that maybe the CVCs, especially if they are experts in the space that your business, your startup is in, they definitely have possibly way more connections, possibly than VCs in general, or they might be able to open doors faster.
In some areas, the CBC are quite well informed about the industry or certain areas, but their knowledge sometimes is limited to their own field. And if they are to look for wider technology elements or new business approaches, they need to go out of their own field. So it's a bit difficult to compare with normal VC. And even for VC, some VCs are very strong in particular areas, and some VCs are very strong for general investments.
Thanks for answering. So yeah, I guess real due diligence and really researching the VC and the CVC if they can really provide value to your specific industry and possibly even like the person you're dealing with in the venture capital or CVC as well. I can see makes a big impact. So I think we have a pretty good idea of what CVC is now and how it differs compared to a VC. But how would a entrepreneur evaluate a CVC?
If you look around, there's certain difference in the approach of these CBCs. Some are very focused on the particular areas for strategic alliance. And if they are having too much narrow focus, that might not be very good assistance for startups
Would you
to make a very broad growth.
would you mean by narrow focus meaning is they might maybe potentially pressure the startup to go in a certain direction that's more for their own gain?
Maybe the startups have several lines of business or several product lines, and CVC might put pressure to focus on just one particular products or one particular business ideas if that might be beneficial for the corporate to acquire or to partner with.
Thanks for clarifying. And how else could we evaluate a CVC as a startup?
So, apart from having focus, in some cases, the CVC might have very strong restriction on to what extent the startups can work with outside companies. And you might end up having a very exclusive arrangement on contractual terms once you get the investment. And that might limit the possibility of future growth of the startups. So you have to be careful to what extent your relationship with CVC would help you to grow versus your possibility to work with one particular large corporate.
Thank you for listening to this episode of Scaling Japan. In addition to serving as your fine host, I also provide advisory and coaching services to business owners who want to 2x, 5x, and even 10x their business. So stop holding your company and your team and your employees back, and let me help you and your company scale. Find more information at scalingyourcompany.com. Now back to the episode. Gotcha. No, that makes sense. I think one could be that narrow focus. The other one is they might get you in a deal where it makes it difficult to partner with other companies or, really expand.
And also, since now many large corporates have decided to set up CVC, not all CVC would have an capability to make proper investment decision or proper ability to support startups after investment. So you would need to make sure that who is running the CVC and what kind of a structure CVC has been created.
No, I think that's a really good point because I could see someone who they might be blinded or charmed by the name of the CVC or the name of the corporation that they represent and assume that, let's say, the level of operational excellence in the parent corporation is also applied to the CVC arm as well.
Right. And sometimes when the large corporates decides to set up a CVC, they would assign someone internally with very few knowledge in investment or limited knowledge to support startups.
I mean, it's a little bit surprising, but is there a reason for that? Like, I guess my assumption would be maybe it's someone they have in mind for maybe a potential director role or, someone they would like to bring up into the C-suite. So that would be kind of like a channel to move up the corporate ladder.
It really depends on the corporate. Some corporates would understand the importance of investment arm, and they bring in venture capitalists. But some corporates would just think CVC as a certain test beds and try to start with someone in the corporation who was engaged in research and development or investment innovation activities in the past. And that may not end up in the very good result. So you have to be careful who is actually running the CBC and what kind of support you can get from the CBC after getting the investment.
Yeah, I was curious, like what type of person internally they would promote to such a position, but what you explained about like someone who's maybe a past researcher or maybe did something in the investment in a different department would be someone. You also mentioned about bringing in professionals sometimes, and if they were to bring in a professional, what are some typical, I guess, backgrounds of the professional?
Someone who has a venture capital background in another venture fund would be ideal. And if you can combine that with the internal staff who has a good knowledge about the corporate structure, I think that works well. But if you just let someone who lacks the knowledge of venture investment, you may not get the good result.
I see. And you mentioned, I think, when we were discussing earlier about how to really evaluate a CVC, I think some tips you gave me was really trying to understand why they created the CVC in the first place.
Right. There are several different reasons for corporate to set up a CBC. Basically, it's most likely that strategic alliance, but what is the main strategy of the company? In my world, financial service area, in some cases, they would like to strengthen particular area of financial service, or they would like to reduce the cost of their operation, or in some cases, they need to compete with other players in the market in certain service areas. And these kind of background is quite important to understand why CBC became an existence from certain corporate group. And that would help you to understand what would be the expectation from the corporate side to partner with certain startups. And if that goal is good match, you would have better future. But if that has certain mismatch, you would end up in miscommunication.
Thank you for sharing that. And I think, yeah, the other one you mentioned was really just seeing if the corporate, rather than relying on their name, to really look into how much support they provide the person in charge. And yeah, kind of just seeing what their track record is in supporting other companies.
Right. And first of all, in which section or the which department of the company this venture capital arm is controlled by is one important element. And also, after setting up, it's important to see the track record to what extent they have been making investment. And I think by reviewing the track record, you would have pretty good idea whether they are focusing on later stage or early stage or seed round, and also what kind of areas they are making investment in, what would be the size of the investment they are particularly making. And you can imagine whether it would be a good fit for your startup.
Excellent. Well, that's really useful to know. And now that I know a bit about kind of like how to evaluate them, I think the question on everyone's mind is now, how do I approach a CVC?
There's no golden rule, but CVC people are trying to look for startups anyway, just like VC people. So you try to attend the industry events, or typically they would have their website, and also they would have their investment activities in the past, and they have certain contact points that they would make themselves available. So I think it would worthwhile to try getting in touch with them if you feel that certain CBC would be a good match for you.
Oh, thanks for sharing that. And do you have any other thoughts on how to approach a CVC?
I guess if you start doing your fundraising, I think the information will be passed from one venture capital to another. And it is important to access the network of people, right network of people for your industry. So, for example, in my area, fintech or financial service, we have pretty good network between the startups and startup community and venture capital community and CVC people who are exposed to the fintech area. So once you start doing your fundraising, the information will be passed on if your startup has a good potential. And so I think it's quite important to meet people in the network to have opportunity for them to refer you to someone,
Oh,
and not a very simple thing to formalize, but it's one effort that you need to make.
yeah, no, definitely. And do you, FINOLabs, do you help corporate, or I guess help startups with kind of choosing which is probably the more suitable path or what's more strategic for them?
After setting up this FINOLAB, and after a while, we decided to have our own fund, especially for early stage startup, Series A or a seed round. Before these startups have a good opportunity to have conversation of VCs or CVCs, we decided to help them from the early stage. And during the process, we started to have a conversation with other VCs or CVCs. So in some cases, we make reference for other VCs, and also we organize a pitch contest for startups so that their capability and their business ideas would be visible to many investors as well as business partners, for example, financial institutions.
Excellent. And we're going to definitely put some links in the show notes for where people can find out more about the pitch contest and FINOLabs. And yeah, you mentioned earlier about, I think, the corporate structure and how the CVC arm fits into that corporate structure of the department. But could you share more information on what possibly like what types of departments or like where the CVC is located in a corporation's or organization structure?
One example is some companies would see it as a pure investment. So maybe like treasury or accounting or budget management or corporate planning would control the investment and to maximize the return. That might be one possibility. If you are well informed about the industry, you might have a good opportunity to find right startups and can maximize your return in long run in addition to your strategic purposes. And another example is to have it with research and development or innovation arm, trying to make CVC as your test beds or innovation, part of your innovation arm. And another possibility is any line of business would set up their own CVC to focus on particular line of business. So I guess these three examples would be a typical within the corporate structure.
Have you ever found yourself having trouble creating a business plan? Do you pretty much operate on a day-to-day or week-to-week basis, creating confusion and chaos in your organization? If that sounds like you, I recommend you join my Entrepreneur Bootcamp. In my bootcamp, you'll set an achievable but challenging revenue target for the current or following fiscal year, and we will create a business plan to make it a reality. See more in the show notes below. And now back to our episode.
Depending on the structure, like based on what you've seen, how does it impact in their dealings with the startups?
Depending on the structure, you would find a difference in the decision-making process. And in some cases, CBC has a strong autonomy to make investment by themselves. And in some cases, CBC would always need to get approval from the head office or your department in charge of the CBC. So these difference would have an impact on how the investment decision is made and in what speed and what outcome. So if you are a startup to have conversation with CBC, it will be helpful to understand what is the structure of the CBC within the whole corporate structure.
So to make sure they have the, let's say, the resources, possibly the authority, and that, let's say, the corporate strategic vision, and see how you align there to see how much they might potentially support you in the future.
Right.
And yeah, what are some differences between CVCs in Japan versus the West?
In Japan, the CBC became quite big, or even smaller corporates started to set up their CBC recently. So there are certain boom or big trend within CBC to expand recently, partly because the Japanese corporates are quite rich in cash. And at the same time, they have a limited place to invest. So they need to find the right way to make certain exit. And CVC is one way of doing it. And instead of making big investment in research and development, they decided to set up a CVC. And if we are to look at the cases in Western world, it's quite difficult to generalize, but the successful CBC has quite long track record, and I think they have learned from the past experience that using their knowledge in particular industry, they would try to maximize their return, not just simple strategic alliances. So along with making partnership, they would try to find the right partner to get return in long term.
Where CVCs have a lot of capital, but not essentially the right places to put it. I'm putting together a list of venture capital firms, CVCs, that have invested in foreign-run startups in Japan. I've seen some investments where I checked the investments like, okay, they have a lot of capital to spend because this seems like a terrible investment. And it has no match with that corporation's core competencies. It's an area they have no idea about, and it seems cool and trendy. So it was kind of funny seeing that for those out there with startups, there is capital around that's looking for a home.
Right, yeah. In some cases, the CBC is set up to publicize the fact that large corporates are making investment for their future, and they try to find startups with a big name and try to make publicize the fact that they're making investment. Even if the investment doesn't make big return, it may have a certain PR effect.
God,
And
thanks for educating me on that. That makes
right.
perfect sense.
Yeah, so it's quite difficult to prove that, but we have learned many cases of such an effort.
I see. Yeah.
And so, in some cases, if someone has a very good idea with a very eloquent person leading a company, they may be able to attract investment from fairly large corporates. And once the investment becomes big, it will create its own publicity.
Thank you for correcting me there. Good learning point for me too. Okay, you've answered the why for me.
Right.
Because I was thinking like, why do they do this? But thank you
Right.
for giving a logical explanation for what seemed to be a very illogical decision. Yeah, I think that we talked before, but I wanted to ask you about, other than CVC, like, venture capital, if there was any alternative ways of raising funds.
One thing is that conventionally banks were very conservative and they would ask companies to bring 3-year accounting outcomes like PL and BS, balance sheet and profit and loss for 3 years. But it's changing a little bit, and many banks are starting to introduce what they call a business loan or business lending, which would try to evaluate the company with account record. So if you have a good outstanding of deposit, income, and payment record, they would appreciate that and make you a loan from analyzing that data. So if you have some business record with a large financial institution, you might want to check whether their small, medium-sized enterprise business loan is available or not. And also, we are finding different alternative way of raising fund. For example, what we call asset-backed loan, where if you have certain receivables or like inventories, they would make a loan out of it. And one example is what we call invoice financing, or particularly many startups are starting to bring in what they call factoring. Factoring is where if you are selling goods to someone, and if the buyer would have promised to pay a seller in certain period of time, the factoring service provider will pay you in advance with the invoice or contract record. And you can do it not telling the buyer, or if you can get the contractual arrangement with the buyer, the factoring service provider will get the final payment from the buyer. So that kind of arrangement would help startups to get the funding if you are to deal with large corporates as a buyer.
Gotcha. Without having to give equity.
Right, right. And instead of giving up the equity, some financial institutions, especially the public ones, are starting to introduce what they call a capital loan. So it's basically a loan, but it's not for working capital, but it's more to set up the company in the beginning. So you can arrange the loan in 5 years' time or even longer, and pay back once you grow. So that can be an alternative to make venture funding. And also, there's certain financial instruments called private placement bonds. So if you are to sell bonds to a public, there are many restrictions. But if you are getting the funding from a small group of people, so up to if it's less than 50 investors, you can make this bond very easy to set up. So some of the smaller banks are helping their customer or small medium-sized enterprise to issue a bond instead of taking a loan. So you would have a variety of fundraising methods aiming at the small, medium-sized companies. And startups are now turning to different these instruments.
Thank you for sharing about those alternatives. Because I plan on getting another guest to talk about bank loans, and I think most people that's kind of what they think of when, let's say, just venture, or let's say capital for equity, taking a loan. But thank you for introducing these other ways that I think most people probably don't know.
And even a bank loan has variation, these, as I mentioned in the beginning. So it might be interesting to have experts' explanation and to what extent the banks are extending their loan facilities to smaller companies or companies from outside of Japan.
Thank you so much for your time. And is there anything else you'd like to share us about FINOLABs?
Right. So FINOLAB has a YouTube channel called FINOLAB channel. And we are publishing a different video on these fintech topics. And also we organize events. And then they're mostly in Japanese, but in some cases we bring in foreign guests to have an interview in English, or we organize English events. And we organize competition or like award to give to creative startups or to financial institution. So I appreciate if you check out this FINOLAB channel.
Excellent. Yeah, we'll put a link to that in the show notes for sure. And also, do you have any other requests for the audience or any other information to share?
We are helping some of the foreign startups to enter Japan, and particularly in collaboration with Tokyo Metropolitan Government and Financial Service Agency. And they would like to have more foreign startups in financial service area to enter Japan. So if you come across someone who's trying to knock on doors of Japan financial market, we are always here to support them.
Thank you so much, Makoto, and thank you for coming on the podcast.
Thank you for having me.